Hello traders out there in Traderland, D7 here with Grok Trade, and we got a lot to talk about here. The markets are crashing and we're looking at a major recession coming in the near future. Some people are saying it's not just a recession that we're going to be experiencing like we saw last year starting in 2022, but also this could in fact be a depression coming in our future, and I'll be sharing with you some important things to note that will help you going into the future. But guys, if you want to know who I am, been trading in the live markets over 25 years. I've been around the block a long time, institutional trader today. And if you look here, pause the video, you can look at some of my accolades. But more importantly, my beautiful family that's here out of Tampa, Florida. All right, so next, what we're going to be doing is talking about a lot of stocks and things. This is educational purposes only, not at all something. Do not take anything I'm saying where you could buy or sell any security at all, educational purposes only. So everyone's talking about Silicon Valley Bank exploding. Let's talk about that. So why did it fail? In short, SVB or Silicon Valley Bank encountered a classic run on the bank. Why? Several forces collided to take down the banker. First, there was the Federal Reserve, which began raising interest rates a year ago, taming inflation. They had to do that, right? The Fed moved aggressively, and the higher borrowing costs sapped the momentum of tech stocks. Tech stocks, remember that had benefited the bank. All right. These higher interest rates also eroded the value of long-term bonds that SVB and other banks gobbled up during the era of ultra low, near zero interest rates. SVB's $21 billion bond portfolio was yielding an average of 1.8%. The current 10-year treasury yield is about 3.9%. At the same rate, venture capital's VCs began drying up, forcing startups to draw down funds held by SVB. So the bank was sitting on a mountain of unrealized losses in bonds just as the pace of customer withdrawals was escalating. And it only got more with the run on the banks. So Silicon Bank collapse update. Here's the latest, okay? Main point, Silicon Valley, SVB, is America's second largest bank failure ever. SVB stock trading halted after tanking 60%. That was last Thursday. Had a monster drop, and the exchanges had to come in and halt the stock because of the bloodbath taking place. FDIC has acted quicker than it ever has acted before in history. They came in, they're acting as what's called the receiver, which typically means that they're coming in and will liquidate everything to pay off the customers and also other business associates of the business. Okay, SVB staff recently was just offered 45 days of work at 1.5 times their pay. In other words, they're taking care of the staff, it sounds like, but saying it's on you got 45 days. The CEO as SVB, say that 3 times fast, no longer a director of the San Francisco Fed. Interesting, right? So Wall Street fear gauge options volume jumped to a 4-year high during the news on Thursday. Wasn't that crazy, guys? We have international influence taking place. You're hearing the word contagion, right? I had to look that up. Didn't even know what a contagion was, and everyone's talking about contagion. What that is a disease that can be transferred. It's not a disease. It's about a disease spreading due to contact. Just because SVB is connected to certain things, it's affecting different businesses. So UK Finance Ministry and Bank of England work to contain this fallout of the bank. Brazil's fiscal framework to include rule to track spending. Weeks ahead, inflation, CPI is coming out, guys, this next week. And it's on deck, and everyone's watching what the Fed is going to do. This is so important to see. And by the way, every time the Fed bumps rates up, and they are expected to bump up again, is it going to be 25 basis points, 50 basis points? What will it be? It's almost 100% certain that the markets will drop on that day and going into the future. So remember that. Now, should you listen to anything that I'm talking about? I have a little bit of street cred. I want you to hold me accountable for those that are new and don't know anything about me. Go to this video here. You can see the website right here, this YouTube video. So mark this down, pause the video, go and find it. I'll probably add the link into the description so you can find it yourself. I called this market top. I called the 2008 market top. I did it in 2007 in November. I was saying, we got bad things happening when these trend lines get broken. They got broken. Big market correction. They call it the Great Recession today. Now, here's the thing. January 8th, go to that video, 2022. I said, likely these are our highs and we won't get there anytime in the near future. This will be the market top. Sure enough, that's what's happened. Right now, the deepest drop we have seen since that call was 27% down. We're roughly down 20% at this time, okay? So here is a chart. I'm looking at a monthly chart on a line chart. I want to share some things with you about this recession. Now, normally, this goes in 1990, okay? 1990 up to or 95 rather, 1995, okay, going up to 2000. 95 to 2000 was a 5-year bull run, okay, 5-year bull run. And then there was a 2+ year drop. So 5 years up, 2 years down. It happened again. We went here in 2003, went up to 2008. 2003, 2008 is a 5-year bull rally. Up, bull rally. We get to this swing high, and then we have another 2-year drop. 5 years up, 2 years down. We come up and have a 5-year rally. A 5-year rally turned into a 10-year rally. Now we're into a 12-year rally, and then we're up and we're 13 years straight up without a major market recessionary drop or pull down, which is unlike anything we've ever seen in history. But if you go up 5 years usually and down 2, what happens if you go up 10 years? 10 years, you should go down 4, right? What if you go up 12 or 13 years? You should go down 4 to 5 years, okay? I'm looking at it relatively speaking. Relatively speaking, that should be the pullback. So what I'm looking at here is we're staying above a major trend line, okay? This trend line that was back here that we got 2009, we put in the bottom. This was the Corona crash bottom here, little micro crash that we received that lasted 2 months. And then that gives us a nice trend line. We're above this trend line in a nice uptrend. Now, here's the problem. The problem is every market needs a retraction. If you notice, we had last year, 2022, what was our hot market? Energy was our hot market. That sector was up roughly 56%. Everything else took a nosedive. Everything else crashed and burned. If you look at a sector rotation chart, you'll see that when energy gets super hot, the recession starts. That's when energy gets very, very hot, that's the start of the recessionary drop that takes place in the markets. Well, if you look here, I'll also notice this is called the Grok. This is one of our trading algorithms. I happen to have it up on my screen. I only have the sell sides. I don't have the buy sides here. But this is a trading algorithm that we have. And you can look here that right here at the 12-year, when we got there, we had a slew of sells come in. Look at that. A number of sells saying sell, 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 sell up there at those market highs, this indicator did. So this is very, very powerful indicator that helps show these things, or an algorithm. Now, how many more years is the market expected to be down? How many more years? It could be 2 to 3 more years going down. But let's talk about facts here, okay? I'm going to show you something that maybe you know about, maybe you've heard about. I went to Fred. Go here yourself. You can type in Fred, put in the 10-year treasury versus the 2-year treasury, okay? Do that. This is looking at the bonds. All this is, let me simplify it for you. Anytime the yield on a 2-year bond is higher than the yield On a 10-year bond, that's an inversion that takes place. This is the monthly chart. If you look at this monthly chart of a 10-year and versus 2-year, all we care about here is anytime this histogram, do you see this histogram, goes lower than this black line, this zero line. That's called your inversion. This has happened 6 times and it's batting 1,000. It's 100% correct. Every time we see an inversion, 100% of the time we see a market correction. So this right here, this is going back to 1980 when we got it. We had 1980. This gray area, 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 these gray areas are considered recessions. I went and calculated the S&P 500 and looked at the recessionary pullback of this gray area. This gray area, when we had the negative ticks and when they went from negative to positive, that gray area was a 20% loss for that recessionary pullback. And then it went positive. Then we went negative. Here's the inverse again. Inverse, inverse, inverse. This gray area here signified the 81 market crash, and it dropped 28%. The 80s was a brutal time to be trading in the markets. So a big, big drop of 28%. Most of us also remember that in the 90s, the early 90s here, we had the inverse. See the inverse that took place? We had this market, and this was a nasty little 91 market correction, and that recessionary was 22%. You look over here, everyone remembers the 2000 tech bubble drop. S&P was down 26%. And the Great Recession, guys, from the high to the low, this is from the highest point of the recession to the lowest point, guys. This is what this is down 55%. And then on the Corona crash, they didn't see an inversion here. They still marked it as a recession. But if you looked here, we zeroed out. So we didn't flip upside down, but we zeroed out. We went to where they were the same. So they're looking at that as that's just as bad, it looks like. And then it dropped 34%. But what I shared all that with you to share this. It's happened again. Here it is. This is the 7th time. We're down, 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 and look how deep this inversion is taking place. This inversion is a significant inversion from the 2-year versus the 10-year. But here's the point I want to look at, guys. The point I want to look at, and I'll probably do this on the next chart, but look how the histograms are actually getting deeper, deeper, and deeper. Where the problem comes is on the flip. That flip, when we go lower, 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 those histograms start to get smaller, 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 going back to the zero line, and the flip taking place. That is when you get nastiness coming. So look at the gray area. The gray area is when we go positive again. These gray areas positive. This gray area is when we go positive. You see that? This gray area positive. Just because it's the mark of the recession, the markets have already been dropping to that point. So we have to understand that that's not when the market started to drop per se. That's just the mark of what they call the recession. Like right now, people are we in the recession? Most people are saying, no, we're not in a recession yet. I said we're in a recession as soon as the market top was put in. I said, as far as I'm concerned, when that market top happened in January of 2022, I said there it is. And then soon after, we got to 2 GDP negative drops, right? And in a row, consecutive. And people say that's when the recession. And it seems like they keep pushing the can down the road on what a recession is. And the markets, guys, the markets dropped from that point 27%. And now we're down 20% and still heading down. So hard telling where the bottom's going to be. I'm going to be telling you, I'm going to be showing you some things here, okay? So here are my thoughts. This histogram here, soon as this starts to get smaller and starts to head up, that is when the recession is going to start sinking in. That's when bad things are going to be happening. I believe that in this inversion, the recession is imminent. This is imminent. It's coming. The recession will begin very, very soon. The World Bank has predicted a global recession for 2023, the World Bank. and they're anticipating a GDP growth of only 1.7%, the slowest pace outside the 2009 and 2020 recessions since 1993, guys. Pause the video and slow read this. Average recession will last a little over 2 years. Remember that. The average recession lasts just over 2 years. They're saying we're not in the recession yet. Keep that in mind. So there's 647 trading days to recover. So when a recession hits, it's roughly 647 trading days to recover. There's only 253 trading days in a year, okay? So there, I'm trying to give you some stats. Here are some stats to be leaning into. So right now, we're building an argument that if the recession hasn't technically started yet, we at least have 2 years to go. At least 2 years of turmoil to go through. The S&P 500 down 28% from 122. So 27 to 28%. It's right there between those two numbers, okay? All right. Since 2000, the S&P, okay, since 2000, the S&P fell an average of 39%. So some more thoughts here. This is craziness. I'm giving you a lot of information. This was done by Nick Gurley or Jurley, however it is, but there it is. You can look at it and look at the chart he posted. But he says the money supply is officially contracting. He's looking at the M1 versus the M2. Do your own research on that. This has only happened 4 previous times in the last 150 years, okay? Each time a depression, not a recession, a depression with double-digit, not stock market drops, but unemployment rates followed. Go look at his tweet. Since 1949, anytime the leading economic index, it's the LEI, has declined by at least 4%, a recession has followed, okay? In December, okay, we saw a drop of 4.2%. So again, anytime it's more than 4%, a recession follows. The New York Fed's recession probability metric looks at the size of the yield curve inversion between the 3 months. So I was looking at a 10-month, 2-month. This is a 3-month versus the 10-year note. That's what they're looking at for a recession probability metric. And the current inversion hits its highest level recently since 1981, guys. Since 1981. So the New York recession probability indicator suggests at least a 60% chance of a recession within the next 12 months. It's much higher than that. Not 60. It's 100. So here are my thoughts continued. The market will likely drop. Okay, this is me putting my 25 years of technical analysis skills to work here, looking at and me living through several market crashes, and not only living and navigating through those market crashes, me calling the major market tops of the 2008 market crash, the Great Recession, and the most recent one here. You can go back and watch those videos. I want you to see proof for yourself. So here are my thoughts. Markets will likely drop another 10 to 25% from where they are at now. The markets are down 20% currently from the last highs we got a year over like 13, 14, 15 months ago. So we're looking at that. From current levels, another at least 10% drop or to 25% drop. The best guess that the spider, the S&P 500 ETF monthly chart will hit a 50-month Fibonacci retracement, which will put the spider around 349. That is this X right here. That X is the area, has major support that goes back to 2020 area. But it breaks a lot of major moving averages and a major trend line. It'll get there. I think that we're going to hover around this area. Now, we could get as low. I mean, we could get as low as, we could go down and bounce back up. But I think this is the most likely area that we will really find support and buyers will come in. However, due to the chances of double-digit unemployment coming, and the recessionary drop taking place with the hardship that the banks are already seeing, because of all these things, it could go deeper. So the worst case scenario, and I think that on the Fed, we're going to see a 61.8 Fibonacci retracement tag, and which could drop lower but retrace back to it. That means we'll hover around 318 on the spider, 318, which is 18% drop from our current levels, 18%. So another 20% drop. Now, what I say by that, we could see it drop more. We could see it drop another 25%, but it should rally back. Those will be extensions and come back. I think that our body on a candlestick on a monthly chart will rally back. So we could drop lower here and rally back in closing, giving us a hammer here. So if you notice the trajectory coming down, this is the choppiness I think we'll see coming down. The question is, if will it chop around here, hit this, find our lows, and finally go higher, going later, or will we hit these areas and then start to bounce up, or will we drop and will the recession, if we go into a depression, guys, will we just start chopping sideways for several years? We could do that. But these are my targets right here, and you can see them. So the targets are, I called this top right there. I said that was likely our top at 480. We're going to be down to maybe 318, okay, is where I think we're going to be. Now, we're going to go into some charts. We're going to look at some charts, and I'm going to go into technical analysis. As I already showed you that. So there's if you want to see that video. Okay, now what I'm going to do is we're going to go here and look at some charts. So the chart that you're looking at here is my, down here is my daily chart. Here's my weekly chart. Here's my monthly chart. And we're looking at the spiders first. Guys, on the spiders, and thank you for being with me. I'm really proud of you guys for you being on this video and educating yourself. I mean, kudos to you for being here and listening and educating yourself. And thank you so much for just hanging with me this amount of time. But Thursday was here. I mean, bam! Friday, bam! Thursday broke a major 200-day moving average, big red, and then we dropped and broke two major trend lines on Friday on huge volume. The volume was massive on Friday, guys, but we are extended way down. We are oversold now. We could see a quick retracement before we see more downside. That is what I'm expecting, but we broke a lot of support. Those supports will act as resistance. Look here at the NASDAQ daily chart. It looks like a nice bull flag. See, up, a flag waving in the wind. Massive drop to the downside on huge volume. It looks like we could still keep dropping lower here until we hit this area, but we're not oversold yet on the Qs. We're oversold on the NASDAQ, not on the Qs yet. I think we have more downside opportunity there. The Russell's 2000 is at a major area of support. So if this bounces, everything else will bounce. Huge panic sell volume. Big drop on the RSI. I mean, a deep drop. Any sort of bounce will get a hook and look for upside opportunity. Same thing. I could see these. This drop was you can see buy. This drop was a buy. We don't have a buy here yet. When it pops up, that'll give us a buy. But and this low was a buy. You can see that. Again, this is my algorithm. You can get more of that just at Grok Trade. Go to Grok Trade and /algorithm. There's an algorithm at the top. So you go to Grok Trade and go to algorithm. So financials, very important. We look at financials. Financial dropped, and financials dropped on the 7th. That was Tuesday, guys. Tuesday was a monster drop. That should have woke everybody up to the problems that were happening. Tuesday was the shot over the bow. That was the thunder in the distance. That was the problem. Big volume sell on Tuesday. Whoever was selling financials on Tuesday knew what was happening coming up on Thursday, guys. I would, if I was the SEC, I would be finding out who was selling short banks on Tuesday and what information did they have, okay? Thursday was the big crash when the news broke. Friday, trying to deal with the crash. Very whipsawy, massive volume, and a staggering drop. I mean, look at this. We haven't seen a drop this deep for a long time, guys. Long time. This is very oversold right now. Very oversold. Very oversold. US dollar up. It's bear flag. See this? We're going down, bear flag. This looks more bearish than it is bullish. So I would be looking to short the US dollar, but if the dollar drops, that means the market should pop up. I think we have. I mean, look at this. We got a sell. The sell right there. It gave us a sell right there at the top. Gave us a sell, and sure enough, it's dropping. We had another sell here, and then it plateaued. We got a sell here, and it plateaued. So, we got several sells there, so we got to be careful. Gold daily, there's the bounce. So, I mean, guys, I was gone for a long time. I took an 11-night cruise with my family, and so I was gone a couple weeks, and big drop here on gold and silver. But look at this pop, this rally taking place, big time rally on huge volume. A lot of people moving into gold and silver on the daily. Gold is a lot more powerful than silver at this moment, but we're bouncing off a support area. If I zoom in, I mean, look at this, or zoom out a bit. Big symmetrical triangles, we're at major support. Look for that just to bounce higher. I'm looking for gold and silver to bounce. VIX, a huge spike on fear, guys. A massive thing on fear. Look at this. It said buy here on the VIX. I'm looking at that buy signal. And then up here it said sell on the VIX, and it dropped. Now we're up. We're going to get a sell on the VIX soon, coming back down. But a quick look on Bitcoin is down, big pop. My algorithm got me. I was in at 17,000 down here, rode this all the way up. We sold it and it dropped. I recently got back into Bitcoin and down here, and I mean, wow, we're up 21,400 already, so not too bad. Liking what I'm seeing. And you can see down here we have a buy signal taking place down there. And look at these sell signals right there at the top. So yeah, really good algorithms. You just place this. This is an indicator that I have, and this indicator will tell you when. And I can go in and change these. I go in here and I can change these numbers. And when I change this number or these two numbers, I can tweak these buys and sells to tailor it to whatever chart I'm looking at, which gets very powerful. Ethereum, nice little bounce, looking good. Okay, now I want to look at a couple stocks here on the weekly chart. Okay, so the weekly chart, very important. It is better and bigger, more important than the daily chart. Big, massive symmetrical triangle, guys. Big, massive symmetrical triangle. Last week was a bloodbath. Last week, guys, we were down 4+%. The NASDAQ was down 3.7%. The Dow was down over 4%. The Russell's 2000, wow, down 8% last week. So here's what I want to share with you, though. Symmetrical triangles can go up and or down. We are caught within an apex. Look for a major move, either up or down. Guys, do you think it's going to be up, or do you think it's going to be down? Out of everything I just shared with you, chances are very likely we're not going to be at these levels in the next 6 months, 12 months, 18 months, 24 months. We're going to be much lower, okay? So there's something that we have coined here at Grok Trade with our trading. We're mentors. We teach people how to do this stuff. We only teach three days out of 30. So we only do 3 days a month is all we teach. But in the teaching, we talk about something called a death hook. Death hook would be if this thing comes down, breaks out, we get a pop. So this is a weekly chart. The weekly chart breaks out like it's breaking out of the symmetrical triangle to the upside, but immediately comes back down, breaking down through these two trend lines, and then you will get a colossal drop in the markets right here. Great time to be making a lot of money to the downside. Yummy. A lot of money to the downside. You can see the sell that took place here. Down, this sell was right there. Down, That was a buy down here, buy. So you can see we had 2 sells in a row there saying sell, and there's a big drop with those 2 sells. We had 2 buys here and a nice run, weekly run. So and then our last buy was down there. This was the Corona crash buy, and then it rallied straight up. So not bad. NASDAQ, big symmetrical triangle. I have this line in here. I just don't pay too much attention to this line. What's really important are those 2 lines. We're in this resistance. We're heading down, but this could break out. But if it breaks out, it could come down, giving us a death hook. So the symmetrical triangle, death hook up and then down. It looks very, very imminent. We have a sell signal. Russell's 2000. We're at major support. There's the question. Everybody should be watching the Russell's 2000 weekly chart, the IWM. We're at a major, major trend line that has touched once, twice, 3 times, 4 times. This is a major, major trend if it breaks down. Now, this broke down on major volume and stopped at it. It's like a bowling ball dropping on ice of a iced over lake. So you have a lake that's frozen, you drop a bowling ball on it, so it's like that big red candlestick dropping down, and the reason it's a bowling ball, it's heavy, is because of all the volume. When you have big volume and a big candlestick, it's like a big bowling ball dropping big volume. It hits the ice but stops. Boom! It sends fractures all the way through it. It weakens it. This came down, went BAM! Weakened that area. So that's telling me there is a good chance of that breaking down. If you look at the MACDs on the weekly chart, guys, we have a nasty negative tick on the histogram heading down, heading down. The financials, huge drop, huge volume. We're under the 0 line, big negative histogram tick, not good at all. However, we're getting into buy territory here. If this drops and pops, so if this drops a little bit and then pops, look for a buy signal there, and you could get a buy on the finances. But I think it's short-lived. It's just going to be a short-lived because people sold too much. It was oversold. It's a rubber band. It drops, has to pop back. So the U.S. dollar weekly, down, bear pullback, look to short that, or people will be looking to short it. I can't tell you what to buy or sell. Gold is a bull pullback and starting to pop straight up. Okay, looking good. Silver is in a symmetrical triangle. It pulled back. This is at the 61.8 buy level. This is a big time level that you should see a bounce coming place, and it looks like we're getting ready to get a turnover here. We got a buy signal. I mean, guys, looking pretty solid. VIX on the weekly popped up, but it's going to bounce around right here. We're under 25 right now. Bitcoin weekly is, okay. We are off the lows, guys. This could be the lows right here. That could be the lows. I'm not sure yet. I think if the market we're seeing correlation with Bitcoin, but with the banks dropping, people are starting to say, hey, maybe the place to put our money is Bitcoin and Ethereum and cryptocurrency. We're seeing that right now. So it's breaking correlations, Wall Street correlations. I don't want to get into the weeds on that yet, but we're getting ready to add cryptocurrency big, because when the markets take off again, the crypto will rally and rally strongly. We will be ready. We're going to be teaching cryptocurrency. We're going to show you how to get in and how to in a responsible manner. So, and quick look here to wrap up, guys. A quick look on the monthly charts. I mean, at the time of this video, it's March 12th. We got a lot of month left, and a lot of month left. But what I do not like is it dropped down here to the 50% fib level, okay, on the monthly chart, the spider. We have a trend line coming up, but instead of rallying back higher to this trend line up here, it's already faltering and heading down. So this is showing relative weakness. If it breaks this trend line, guys, look for this leg to extend all the way down and get down to these levels, fairly quickly. I think we'll get down to the 50%, like I told you guys, the 50, and then we could get a bounce. But I think that we're gonna get down here to these lower levels, the 317, 318 levels. We could go lower and then rally back to this level, but Woe to the markets if we go below this trend line, guys. Woe to the markets. Why do I say that? Because this is a monthly chart on the spider, and if I go back, this has held true since 2009, held true 2011, held true 2016, held true 2018, held true 2020. If it breaks that, woe to the market. Bad news. And here's what's interesting. The MACD on the monthly it's negative. It's below this. It's come up, but look at this. We had a couple buys here and we tried to go higher, but those buys now are just it's in trouble. I mean, look at those sells coming in. Right now it's like you start selling this, get out of the markets, get out of the markets, and then it did crash. If it drops here, this could just get really nasty and quick. So that's something we're watching, okay? You gotta watch that. The bank's monthly chart. Bank's monthly chart. It's like it's trying to build this low base. That's not good. If it breaks this line, especially this line, woe to this market if it breaks those. But I think it has a good chance of getting down to these levels. I see it happening. The Russell's 2000 is in a big symmetrical triangle, but you down, it's just hanging out on this floor. It looks like it's ready to break down the monthly. We're gonna see multiple months down, 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 down. It's going to hit this line, and I mean, look at this. MACD is going up, but it's crossing over. We got a red histogram tick. It's crossed over, heading down now. So that's going to head down. That's going to be a problem. On the RSI, we got a bear, a bear formation, down, 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 bear flag. Look for this to drop lower. I mean, it's just no bueno, no bueno. Financials. If you look here, big symmetrical triangle, we're in the apex. This thing's getting ready to make a move. But look, we're at the zero line. We're dropping, negative tick on the histogram. I said sell, sell, sell right there. Had to sell last month. It's like big time, get out, sell, sell, sell. It's just no bueno, no good. I'm trying to learn Espanol, guys. For you guys that speak Espanol, yo estoy aprendiendo Espanol. How'd I do? How'd I do? So U.S. dollar, down, down, down on the monthly. It's popping. But what's interesting here, look at the U.S. dollar. It's showing weakness already. It should get stronger here, but it's showing weakness. It's giving us a buy signal here. That's interesting on U.S. dollar. If the U.S. dollar goes up, it's going to put pressure on commodities. Gold monthly, it's looking like this, looking pretty strong. It goes up and drops, but look at the strength we're finding. This thing could be ready to break out of this area. Silver, big symmetrical triangle. It's a nice bull pullback to the center area. Look for that to bounce. I think that's going to happen. And this is Bitcoin. It's come down, bounce. It's trying to build a base, and it may rally higher. Let's see what happens. Okay, guys, that is me. And I hope this was educational. But let me share this with you. If you want to know more about this algorithm and other algorithms that I have, I highly recommend it. They're hedge fund grade algorithms. That means these guys are not over optimized. They work on multiple securities, and they tell you when to buy and sell. We do not. It does. And you make your own decision on if you think you should or not. Those algorithms I've worked on for many, many years. I have a team of people with me looking to exploit weaknesses on them. We honed in and found the best of the best. That's those. If you want to learn more about how to use artificial intelligence, chat GPT, we use ML, which is a subset of AI, which is called machine learning. We get into the deep learning. We're also going to be getting into neural networks for you geeks out there. It's crazy. But I have made it easy for anybody to use my trading algorithms. I'll be doing an information thing. The best thing to do is go to Grok Trade /Algo1. Algo1. That's the webpage. Algo1. Or go to Grok Trade /Algo and then look for the webinar link there and you get registered. Get registered and it gets you a link. Registered, you'll get a link. And we'll see you. It'll be Thursday night, next Thursday night. What date is that, Janelle? 16th. The 16th. 3/16 at 7 p.m. Eastern Standard. So that'll be 4 p.m. Pacific. And jump on. I'll be sharing these things with you so you can see it for yourself and see if you like what you see. So that is it. It's good to be back. Thank you, Mark the Meerkat, for standing in and helping me out with some videos. And that is it. Take care, guys. Share this with a friend. There's a lot of information here that will benefit a lot of people. This will be one of these videos, guys, that will live for many, many years. And I hope this isn't lost on people. I gave you the best of the best information I could find to help you guys. If you made it this far, I want you to type in the description, made it. Only you and I will know what that means. Nobody else will know what it means that we said made it. I also left an Easter egg in this video somewhere. Let me know if you found the Easter egg by saying found it. In that. That'd be fun. Take care, guys. We'll see you. Bye. Guys, why are you still here? You're supposed to be gone while I still have you. If you haven't joined the 301 mentorship yet, seriously give that some serious thought. Mark the Meerkat's been trading a long time in the markets. As you know, I have too. We take people under our wing and we teach you what we do to trade in the live markets. We trade a significant amount of money on a day-to-day basis in the live markets ourselves. If you're going to learn from anybody, learn from us. It's the 301 mentorship program. We've been doing this a long time, and we're happy to help you. The algorithms, that's a no-brainer. Get in on that. Let the algorithms help you down the path. Education with specialized knowledge with trading algorithms makes you unstoppable. There you have it. Now, get out of here.